slightly more what than the implied open was suggesting, but let's see what we do immediately post open. Maybe the broader carnage will be in the broader market stocks, but about 1.5%. So okay, 400 points. Banks actually, well, not resilient really, I mean, but relatively resilient, if you will. I think all of the things that we see today, we probably see them in relatively to what the Nifty and the Sensex do. I guess the mid cap and the small cap indices would be showing a tick of red too. 2% for the mid caps, small caps too should be in the red. Bring up the heat map just to see if there is anything in the green, if at all. Nothing. Maybe an Apollo Hospitals, maybe a Britannia, which was marginally in the green in the pre-open session in the first ticks. Sun Pharma, Kotak Bank, Nestle, but clearly the defensive bent, pharmaceuticals and FMCG right at the top of the pile, maybe a bit of insurance. But look at the correcting moves that are happening. Metals and auto are being taken to the cleaners. Titan, one would suspect, is also a factor of the point that the markets are looking wobbly and Titan results were ho-hum. Oil has corrected, so ONGC is down, LTI Mindtree is down. Financials are also taking it on the chin. Adani Port is amongst the top 10 losers too, and just shows that almost everything is being taken down in trade today. Tamanna, no luck really. I mean, argue that some of the pharma names are doing okay, but like you said, that's only relative.
Yeah, and it's completely defensive play because consumption, pharma is all that's working. I mean, relatively a divi is about 1% down is looking better than other things all considered. Let's pull up the breadth of the market just for a second before we go back to broader indices, just to give you a sense of how tough things are right now. 2.5% down on the mid cap 150. And the small cap index also really hurting. So it's a broader market cut. The last I checked on the NSE 500, you had barely 3 stocks in the green. And you know, you are going to see that kind of a pain continue. In terms of indices, and let's pull up sectoral indices if we can. I think IT is hurting, PSE is hurting. You know, we talked about how those sectors which have run up the most are going to see the biggest hit. There is nothing on the other side today. 4% down for a cut on realty, PSU banks getting hammered, metals getting hammered, auto, media, PSE, IT, all of it looking pretty bad. Let's pull up the top losers and gainers if there are any on the NSE 500 and look at what's happening there. On the losing list, Archean Chemicals, all right, we can attribute that to results, but 10% cut today. Phoenix Mills, LIC Housing, Sobha. So you're seeing all of your discretionary spend kind of plays are also seeing a bit of a hit. We talked about Titan a little earlier, and yes, Q1 is usually bad, but discretionary spends seems to be the theme which is getting hit. TTK Prestige, Marico, Sun Pharma doing okay on the other hand. A very, very defensive play coming in. So you're going to have a really tough day in the markets today. There is little doubt about that. Not too much of sucker over there. Let's just look at the internals of some of those sectors, and let's pull up realty, banks, and just look at in those indices which are the sort of stocks which are hurting the most. Phoenix Mills is the big hit this morning, 9% down. Sobha, Prestige, all of that list. I want to look at the bank index as well, and then we'll look at what's happening with PSU banks, whether there's any kind of sucker there, and not really. SBI, after numbers which are frankly not that bad for this quarter, down about 3%. PNB is being hit quite badly as well. So all in all, Neeraj, I would say it's a painful market. I mean, now you could try and look at the glass half full. I don't even know if it's half full or 1/3 full right now. But you can say that, yeah, relative to all things, India's not doing that badly, but we're just in the first few minutes of trade. So we'll have to wait and see before making any call on that.